Welcome back everyone to another market recap. My goal with these is to make these as high quality as possible and to go over all the possible trades you could have taken today, both from all kinds of different people on Twitter as well as my own trades. So, with that, let's talk about what happened today. Now, immediately going into the morning, I saw London's lows, PM's lows from yesterday, and previous day's low all line up right here. And that made me extremely bearish. But I had to be careful because although that's a strong target, it's important to know that we got S&T at this low, which means in the short term, it's possible for us to move higher. As well, we got SMT with this low. So two different SMTs that I should have been a little bit more thoughtful about. And with that in mind, market structure was bullish. You can see here we broke 15-minute structure to the upside. So in the short term, with these SMTs with market structure being bullish, our target was this New York PM's highs here. I'll show that in a second. So one important thing I want to talk about is understanding like a good sweep versus a bad sweep. So one of the trades I took today was this 5-minute inversion. This was on my PA account, and in my head, I immediately went back to the trade from yesterday that had this amazing 5-minute inversion. You can see we had a quick move up, and then within 3 candles you inverse, and this did not work. But there's a reason this didn't work, and you have to understand that an inverse for value gap doesn't matter how good it looks. If it doesn't have a good sweep, it's not going to work as well. And you can see that we did sweep New York PM's highs, but this wasn't the kind of sweep you want to see. For instance, I will show you a little bit more of what I mean. So here's that inversion, right? Compare this to the one from yesterday. This was the setup that was in my mind from yesterday. Here you have what we swept from yesterday, and you can see how much higher quality this one is than the other one. You get a quick wick above these highs, and then you get the inversion. This is what you want to see. If you don't see this signature, it's not going to work as well. So do you have that signature in price when you look at this? You don't have that same signature. You get a candle body close above and you get a candle body close below. You don't want to see that. That's not going to provide the same results. So that's why that trade, in my opinion, did not work as well. And then as well, yeah, there was no internal sweep. You want to see something like this, where you get a sweep of a high like this, and it needs to actually like sweep the high, right? This isn't as good of a sweep as this. And so you can clearly see the difference. So anyway, although it was bearish, it was important to understand that there were these two SMTs here. And then as well, at first I didn't think that London pushed into a key level, but you'll note that we actually did push into this hourly rejection block. So this is also a daily and a 4-hour rejection block. And you can see we pretty much perfectly tap into that. And so that should have at least been on my radar that like, hey, maybe since market structure is bullish, reacting off of this rejection block, maybe it's possible that we are going to go take out PM's highs first. And so you can see that we go do that. Next, let's talk about a winning trade that both Hydra and I took. So this was going into, let's just pull it up real quick. So here's the trade from Hydra. He says perfect inversion plus breaker combo. This was a nice 1-to-1 risk reward trade for me. He says this is the macro. It's kind of towards the end of the macro. So I don't know if I'd consider this the macro, but he shows that this is a macro. And the idea with this trade was we were delivering from a fair value gap. delivering from this 5-minute fair value gap, and we're actually not only that, but we're delivering from this breaker block as well. And this is actually a trade on its own. Let's actually pull that up real quick from Ash Trades. Unfortunately, I didn't see this, and I wish I had just looked in. I wish I'd kept in mind market structure a little bit more, because market structure was clearly bullish, and that meant that we were clearly targeting, clearly targeting this high. So I saw this SMT here, and I thought, oh, so we might be bearish here because we got this SMT. But the reality is that this is like a random 5-minute SMT. Do you really want to say that this 5-minute SMT is going to allow us to go all the way down to London's lows? It just doesn't make a lot of sense. Although I wanted London's lows, I was kind of forcing it, or more or less, right? Until you get the proper model to go take out London's lows, you're not going to go take out London's lows. And so that's something important that I needed to understand, right? Here you actually have a model where you get a sweep, right? You get a sweep. And then this is actually a trade from Trader Kane. I'm going to pull that up real quick. I have to actually go find it. I don't have it pulled up. Hang on a second. So this was the short that I would have liked to have taken, but this was just hard because you had to have the patience to be able to take it. So here he shows that we sweep out this high, we hit our draw on liquidity, and so it's a sell model here, right? And so within that you get another internal sweep. I think he's showing that there's SMT at those highs, and then you inverse this on the 3-minute. So you can see here's that first sweep. And keep in mind, we've also swept external liquidity too. We've swept New York PM's highs, right? And then we get this internal sweep here. So just understanding the context of the trade, right? Sweep out this high, sweep out this high. Then you get a close below here. Here's your IFG. And as well, you'll note that we had this 15-minute balanced price range. So in my opinion, this is a good balanced price range because yeah, there's wicks in here, but essentially like not much trading happened within this. So it's more or less a balanced price range, right? So if I turn this on BPR here and I drag this over, you can see how the sell model occurred at this BPR here. So we get a sweep, we get another sweep, then we get this 3-minute inversion to the downside here. And so your stop loss goes, I think this was on the 3-minute, but it could have been on the 2-minute. Either one of them works, honestly. I'd probably just take this on the 3-minute. And your stop loss, my stop loss always goes at the high of the IFG candle, which would have made this a really high risk reward trade. Honestly, maybe just have it at the high of this sweep here, just to give yourself a little more wiggle room. And then you could target this low here, and this was an amazing 3-to-1 trade from Kane. Really, really nice trade. So that's an example of a good trade. Now let's talk about another bad trade. So we'll go into my journal here because I took a couple other trades as well, and so let's pull those up. We had this 5-minute inversion. I took on one of my evals, and I thought this was good at first, but looking back, it makes a lot of sense because if you're getting an inverse fair value gap, you need to have your stop loss below all of the fair value gaps because otherwise you don't know. We could inverse this and it could retrace back into this fair value gap, and you could get stopped out. So when you get an inversion, even though this inversed, you have to have your stop loss below the other fair value gaps, because it will oftentimes retrace into that lower fair value gap. And so although my idea was correct with this trade, right, this 5-minute inversion, it's important to realize that my stop loss should have been below this fair value gap as well. And so that was just on me, but like my bias at this point was correct, because I realized that, okay, we're actually within a buy model. We got SMT at these lows. London pushed into a key level. We're delivering to PM's highs. So at this point, I knew we were delivering to PM's highs, and I messed this trade up, but I did end up getting that trade later on, so that's really nice. So here's that long here. Stop loss below the old fair value gaps low. And it's just one of those things where it's like, since I would need to put my stop loss below both of these fair value gaps, I either need to do that, or I can't take this trade. And honestly, I wouldn't take it because it's just not good enough RR. But then, once we get this retracement, and then you get another entry opportunity at that second one, then you can go take that for a 1-to-1 up to New York PM's highs. It's important to also note that this was also this breaker block fair value gap setup. You can see this 5-minute breaker block. This is a low, a high, a lower low, which sweeps out this low. So this is a good breaker block because we sweep out this low here. I mean, we also sweep out this low here. So it's a good breaker, right? And then we close above. This is the kind of breaker you want to see. We're going to push back into this area. High quality breaker. And so we get this trade from Ash Trades, who shows that this was a good trade you could have taken. Especially because the bias was bullish, and you can see this would have been a nice 2-to-1 risk reward trade. I wish I saw that one. I wish I had my bias right. Honestly, just understanding market structure can help you a lot with bias. Like in this case, market structure on the hourly was bullish. So because of that, I should have been a little bit more open-minded to just being bullish, even though I saw that giant draw on liquidity. Market structure was going higher, so what are we targeting? Possibly this high here. So I'm going to probably try and keep market structure a little bit more in mind when I'm doing my trades. And then I'm also going to make sure that when I take a trade, it can't have a giant move above and below a hold high like this. It needs to be a tight sweep like this. Like this. Like that's a good sweep. That's a good sweep. This one from yesterday was a good sweep, right? Anything that's just a quick pop above an old high is a good sweep. Anything that closes candles above an old high or like isn't quick and fast above an old high, that's not a good sweep. Like this is a good sweep here, right? This is a good sweep. So this on its own would have been a good trade, actually. We'll talk about this. So here, you can use the two candles as one technique, and you get SMT and a sweep of this high. So you can use these two bullish fair value gaps as one, and then here you get that IFG, get the candle body close below, and then stop loss goes at, I just put at this high here, at the high of the old, of the 2 or 3 candles put together. Probably just put it here. And actually, this would have been really, really nice. You could have targeted this for 1.5-to-1. You could have even targeted further down. Maybe the SMT gave you conviction. Maybe you wanted to target this LRLR, right? So that would be up to personal preference. Since I'm just shooting for low-hanging fruit, I would probably just take this 1.5-to-1 or 1.3-to-1. But an amazing trade, and then maybe you left a runner for the LRLR. That's 3.8-to-1. So that'd be pretty good. And then let's look at some more trades. So we talked about Hydra's trade. We talked about Ash trades. We talked about Kane's trade. Let's go over my other trade. So here, we talked about my 5-minute inversion. Okay, so something very important we need to address. I've taken 2 really bad BPR trades in a row, and so something I'm learning a lot about BPR trades is that BPR needs to be in line with the market structure. It needs to be in line with where the market's actually going. You can see in this image here, the market actually shifts structure going into this BPR. And we have a draw on liquidity above. Yes, I wanted the market to go here, but understand the context of the BPR, right? I mean, come on. Close above. Here's New York PM's highs. I know there was bearish SMT, but like you can't base everything based off of this SMT in this like tiny sweep here. The reality is we were coming off of probably a fair value gap as well, and so it's just one of those things where it's like I need to not just take BPRs after we get that sweep and shift, because you got to also keep into mind like okay, what other like I want it to be in line with the structure. So like for instance, like sweep below, and then we break structure, and then we retest the BPR and we wick into it. That's something I want to see. I don't want to see a close above. I would want this to be wick. I would want this to be a wick. This close above is an immediate red flag, and I would not take that. So that's something I learned about the BPR trades today. I'm gonna try and be really careful with BPRs because my win rate with them has not been very high lately. But if I see a really good one, I might try it. So, but yeah, you also saw how we tested that 15-minute BPR here within Kane's trade. That was pretty sweet how we pushed into that level. Then we got trades from Dodgy here. Dodgy talks about there were 2 trades on the Top Step account. You got this one, which actually Harry took as well in the Discord, so let's talk about that. Here we have the trade from Harry. So Harry took this trade. And I believe Camel Trades took this as well, or someone else took this. Camel Trades took a different one, but simple idea being there's a lot of lows here, and we got that sell modeled, so once we close below this for value gap, that's a good trade down to those lows. So excellent job by both Dodgy and Harry. Dodgy put his stop loss here, and yeah, you probably just need to put your stop loss here. I guess Dodgy put his above this candle, but typically I put mine above the old for value gaps candle, and then target these 2 lows here. And you can see this was good because we swept out this high and then closed below, and you just have these lows here. So it's really just understanding the context of your trade. Like, did you sweep out this high? Like, are you in line with the structure of the market? What liquidity are you targeting? Like, you got to use a little bit of common sense. Sometimes I lack that, but it's whatever. Here, he took this trade, and it was the right idea. And as well, you'll note that this already inversed. So this was probably a decent trade. It just didn't happen to work out. But yeah, he said unlucky stop on the first one. So, but this was like, it was decent because you already inversed this fair value gap here. So then once you inverse this one, that's pretty good. And then you have one from Camel Trades here. You notice a pattern here. Once you get a nice sweep of highs here, sweep of equal highs into a fair value gap, close below, we delivered a London's low. And so I got a lot to learn here because I need to learn to take more trades like this. Sometimes I forget that I can take trades like this, but sometimes it's hard to remember as well. So anyway, I think that about covers it for today. Hopefully you found this video valuable. I will see you guys in the next one. Bye.